Hello, everyone. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market report. John, it is sub $1 million day. We have been waiting for this day. For those of you that have been wondering, there's not a lot of data out there, Johnny, and we've been waiting and waiting. We got the data. We're going to do sub 1 million.
I'm looking forward to it. It's 80% of the market. No one really talks about it. It's not sexy, but let's dive in.
Yeah, it's the market. So let's just bring it in. So let's go right to supply, John. We're at 95.51. I can see that we're inching up. We're at 9,600 level back in the great financial crisis highs. Show me the chart.
Well, there's a chart. That's a 2% increase. That's going to keep going up until more things either go off market or go into contract. So it's just kind of an accumulating thing right now.
That's right. That's going to keep going until it doesn't. We'll keep track of that on a 1 week basis. We'll look at that in just a second. Moving on to pending sales. We came in at 2,040. John, I vaguely remember, for those of you that have been following us, we made a bet. Looks like I lost it. I got no excuses. You are right. I am wrong. Show me the chart. I don't want to hear about it.
Well, there you go. That's a 4% increase on the prior week. I'll take the win, and I'll just enjoy this moment for a moment. But there is a bit of an asterisk to this. There's a bit of a caveat, which is that Acris has been really slow. So this number is a bit inflated. So it's maybe not the true measure of pending sales. So there may be some that have really sort of should have closed by now.
That's right. And we talked about that last week, John. We talked about that last week. The Acris filings are coming in way, way down, John. And if you look at monthly closed sales, I want to reiterate this one more time, people, down almost 60% from the prior year. We're going into a period, John, where that's not going to go up. And if it goes up, it's not going to go up by much. It's probably going to stay down. So we are going into a period of very low volume, very high volatility, and all that stuff that we used to use for comps and for price discovery is just going to go down in terms of volume and availability. And we're going to be left sitting here trying to bridge the gap with less data.
That's true. I mean, a lot of the fact remains that, comps right now, if you're looking at comps from last year, they're not too much help anyway. So, but we'll talk about that once we get to the end section.
That's true. Let's move right to the 1 week actives and the 1 week contract signs. I'm moving on here. Where did it come in? 1 week actives. Ding, ding, ding. Ooh, 367. That's way down, John. Show me the chart.
Yeah, it's down. It's down 13%. I mean, I'm going to go full retail sales on this and blame the holiday week for the shortened week in terms of why actives are down. We'll see if that.
You always have an answer for this, John.
Well, yeah, that's what I'm here for. So, let's see. We'll see how contract signs look. Let's see if that is also affected.
And you know what? I'm going to agree with you. If you're breaking this down, that's like 50 a day. You're losing 50 right there. If you add that in there, that's over 415. So you know what? You have something there. Let's move on to contract sign and see where we're coming in. 1 week deal volume, very interesting. 148. Ding, ding, ding.
Oh, surprise, surprise. We're down again. So that's down 30% for the prior week, which was 171. We thought we kind of burst past 150. We're still hovering right around that level. Again, I'm going to blame the shortened holiday week for that.
Yeah. Blame it all you want. The data is what the data is, and we got to look at it this way, John. I'm still waiting for this thing to tick up. It's not telling me that. I need a stronger number. Okay. Now let's get to the good stuff. All right. So now everyone's got to shift focus. Clear your minds. Go into your happy place. Clean slate, whiteboard. What you're looking at right now, John, okay, is sub 1 million only for Manhattan. Okay. And first, before we get to the closed sales and all that stuff, let's look at the listing side, John. How many contracts were signed during this entire year? How many contracts were signed each month? And how much stuff came on the market each month? And again, this is 1 million and under. And when I look at this chart, John, okay, I can clearly see shutdown COVID, right? Here's your shutdown COVID right over here, right? Complete going down there. It's exactly what you would expect, right? And now we got the reopen COVID. And if I look at the blue, that's all the new listings that are coming on the market. So the blue is really just roaring back, kind of making up for lost time, so to speak, John. Contract signed in the 1 million sector, it's starting to rise, but it's not doing anything drastic. So it looks like supply is doing its thing. It's well into its recovery. It's making up for lost time, and pending sales is just slowly coming up. I don't know what you see, but what do you see?
Yeah, I basically see what you see. I think the only concerning thing when I look at this is I see the numbers for January, February, which are two sort of real-time normal months, quote unquote. And if I add those together, I get 1,000. But then when I start looking at the post-lockdown, the reopen numbers, I mean, I'm looking at what, 600, 1,000, 1,600. I mean, there's 3,000 listings there. That's a lot of listings. So it's definitely in the buyer's favor here.
That's right. And if you're looking to track real-time leverage, this is the only data point we have. Now, if you want to go to the closed stuff, right? Usually you have a sales lag with closed stuff, but John, not with us at UrbanDigs. Okay, not with us at UrbanDigs. So here we are. We're looking at closed sales sub 1 million at the time of the deal. What was the negotiability listing discount? Okay, and I want to show you guys this because we're going back in time and showing you by the months. And we always say shut down COVID is different than reopen COVID. And this chart is really showing you. Again, remember, it's going back in time. So when I look at the shutdown months, you're getting a 9%, 8%, and a 9.5% average negotiability. When I look at the last couple of months, these are pure closings, John. Pure closings. It popped right down to 7%, 6.5%. Risk was just priced differently in the shutdown COVID versus reopen COVID.
Yeah, totally agree. This seems to me that the market sort of, the risk idea is kind of coming back to the front, which is that sellers have a better idea of how to price and buyers have a better idea of what they're getting involved in. So I'm glad to see that number coming down.
And let's just make a note in case anyone's, wondering here. You're not seeing them 15, 20, 25% discounts in this sub 1 million sector. Okay. The worst of it was a 9.5, 9.2.
All right. Well, these are average numbers. Look, you still might see it, but it's going to be on an individual property. It might have something to do with completely about the seller, not the market.
That's true. And that's why the median number is really interesting to look at. The median's at 6.5%. That really gets all the outliers out there and looks at the meaty part of the curve. So that's really different than average and median. Very good point. Let's move on to property type, John. Let's take a look at the different property types and see what's going on. Blue is condo. Red is co-op. Okay. And I'm showing you at the time of the deal, closed, only sub 1 million, what the listing discount was. I'm looking at this chart. I mean, besides shut down COVID, and I could see that we're up here, this chart is confusing, John.
It's very confusing because, I mean, you're typically, for time memorial, when you look at listing discounts by property type, co-ops are very sort of staid. And if you look at condos tend to have the higher listing discount, but it seems to have inverted since the reopen. I mean, look at this.
Right there.
Look at June, July, and August. Condos actually have a lower listing discount than co-ops. What does that mean? I honestly don't know, frankly. I'd be interested in what you think, but I don't know. It's cool.
For what John is saying, look at the blue bars. The blue bars of the condo, they're always over the red, right? The condo listing discount seems to always generally be higher than the co-op listing discount. If I look at the co-ops and the red bars, it's a lower level until this point when it inverts. And it looks like the red is higher than the blue. This is really intriguing. I don't know what this means, John. And usually we have some good answers for this.
I mean, there's a couple things it might just be a low volume kind of thing. There might just be more co-ops out there. So they just have a higher number of deals, but typically the more deals you get in, the listing discount goes down. So it's an interesting factoid. I don't quite
I want to open this up, John. I want to open this up. I am putting this in the UrbanDigs forum. Okay, the UrbanDigs forum, it's on our menu on the left side. You can come and join our forum. I'm putting this up there. If anyone has thoughts on this, please come to our forum and join in. In the meantime, I'm going to move on, and we're on the last final two things here. And this is really interesting, John. I love this. We saved the best for last, John. Okay, again, we're under 1 million. Mm-hmm. We broke it down with all the sub neighborhoods that we had data for. And we said, what was the listing discount during the lockdown? Again, at the time of the deal, contract signed, time of the deal. What was the listing discount if you signed during the lockdown? And what was the listing discount if you signed during the reopen? Yep. Here's the lockdown, John. It's very, very interesting. And look at the bottom. Look at Flatiron, Chinatown, Midtown Center, even Carnegie Hill, Greenwich Village are showing 14, 15, 16 to 20% discounts in the sub 1 million sector. Again, this is lockdown deal. This is March, April, May.
It is, and I don't want everyone to read too much into this. So let me just caveat this by saying that when you look at all the deals that populate this, it's about an average of 5 deals per sub neighborhood. So it's really not a lot of data, but it is insightful to kind of get a sense of what that risk panic was during the lockdown.
That's right. And if you switch right now to reopen, okay, now all right, show me all those sub 1 million deals that were signed after we reopened and they closed. Mm-hmm. This is what that chart looks like. And this is what the listing discount. And now the highest one is 13%. And the majority of them, John, is in that 4 to kind of 6%, 7% range. And then you break out here, of course, 9 to 13. And you got a couple that's better. But 4 to 7% is really where you're at.
Yeah, that's the old classic reversion to the mean. But here's what's interesting on this note is when we looked at the data on this one, the average number of trades in the sub neighborhoods that have both signed and closed we're down to 3. So it's an even smaller data set than was signed during the COVID lockdown period, if you can believe it.
Yeah. And I'm glad that you said that, because we're going to end just the way we started. You guys are going into a period of very low volume. Okay, very low volume. So you have to be very cautious with your sales price trends. You got to be very cautious. Your listing discount trends, I think, are good, but your sales price trends are going to be all over the map. With that said, John, let's end it. Let's everyone go to the weekend. That is John Walkup. I am Noah Rosenblatt. We are from UrbanDigs. This is your Friday weekly Manhattan Market Report. And until then, we'll catch you next time.